Hi guys, Harry Yotis here. I'm a professional trader for 20 years now. Started my career in 2005 and still alive in 2026. Rocket ship market today, Wednesday, May the 6th. Be with you. I'm not going to do that every May. May the 6th be with you. Okay, the joke is getting old. But this is a parabolic move higher, okay, on the S&P 500. We're looking at a chart of the S&P 5, the SPY S&P 500 ETF. Okay, it's literally a rocket ship. Okay, nobody could have predicted that. Literally a month ago, we were at 630 on the SPY, and now we're at 733. This is a 16% move, rip your face off rally. Okay, with no pullback, none whatsoever. Gap up here, continuation. Forget about it. It's just unbelievable. I've never seen this in my life. Okay. Rocket ship, everything has been unwound. Okay. We have potential peace in the Middle East. The deal is getting done. This is why we had a big move today. Okay. We'll get to everything that entails this rocket ship. We're going to talk about oil, gold, the war, and stick around. We did some trades today. And my thoughts coming up on what I think this market is going to do going forward. Okay, but first we always talk about the technical picture. Bullish. We don't have to get any fancier than that. We know it's bullish. Okay, so the technicals are bullish. We always pair it with the sentiment, and today the sentiment is still greed. Barely moved. We are up nicely on the SPY, but we went from like 67 to 68. It's not even going to extreme greed. Yes, some of the sub indices are at extreme greed. The momentum, for sure, momentum is at greed. The breadth and the strength is greed, but now we're starting to get the put call ratio to extreme greed. We're getting a lot of call options being bought. Okay, a lot of call options are being bought today and tomorrow, and I suspect that's why maybe we get that momentum for 1, 2, 3 days of buying before we start coming down for a correction because too many people are bullish. And the VIX is basically neutral. It's still pretty elevated. Like if you look at the VIX. Okay, we're at 17. Okay, it's not super low. We're not at this like 15-ish type level. We're close, but I would think we would be way down here in the 13s or 12s with these moves higher. Okay, so in the SPY we have technicals are bullish and the sentiment is bullish, but can still go higher. We are not super overbought here. Like if you look here, we're just barely there, okay? And in a lot of the indicators, we're not super overbought. So we could go higher for the next couple of days, although it is starting to get dangerous, okay? So let's get to the rocket ship, okay? The big news, of course, is the fact that is there peace in the Middle East. We have zero hedge everywhere and everywhere, not just zero hedge, but Trump on Iran. We've had very good talks over the last few days. They just won't have a nuclear weapon, and they've agreed to that. So you can keep going further and you can still see that the unwind in the war trade is starting to happen. We had it around here when we had the market go up with oil go up. Okay, the market has anticipated, players had anticipated this peace talks for 2-3 weeks now. Okay, and the market has brushed it off. They see that Trump is going to make peace in the Middle East and it's probably going to happen. So what happens with oil? Let's look at the unwind trade, okay? Well, oil, big down day, okay? Big down day, although it did recover during the AM period, today, okay, 9:30. If you look at the 15-minute chart, you would see that the majority of the decline here on U.S. oil happened at night, like at 3 o'clock in the morning, which is like European time, okay? And then, boom, started opened higher at 9:30 here. So they started buying it in America. But in Europe and in the UK, they were selling it. So maybe in the UK today or tonight, it'll start going down again, okay? Because that's a pretty good move, like in oil. Like, although I don't like the wick. I would have liked to see it at the close at the bottom. Hopefully, in the next couple of days, as this deal gets done, it drifts lower. And we did get that head and shoulders if it continues to go lower, but it just didn't happen around the 100. It happened at the 110 mark. So we have shoulder, head, shoulder to get that head and shoulders pattern for it to fall all the way back down to the 65 level. Okay, we're still waiting for that unwind to happen. It hasn't happened yet. Just looking good. Okay, and we also had pops in gold. okay, when we thought it was going to be stuck around these levels. And I still think gold in the summertime. I mean, this is a pretty good move in gold. It's up over 100, 140 bucks around, but I still think it's muted. It's going to stay muted for a couple of months because we didn't have that good of a reaction in the miners, GDX. Okay, GDX is up, it's decent, not that great. Still holding above the 84 level, which is key. Okay, on the GDX. So I like the miners. I like gold. It's just that I think we might be muted coming into the summer. Okay, after this war end, let's say the end of the war euphoria stops, we might still start drifting sideways. Okay, so we had gold, oil, and the S&P 500. Okay, the rocket ship move. Let's get to this. Is what I wanted to speak about mostly. Remember yesterday we said we had a channel forming. Okay, and it could break either way. We don't know. Well, it broke to the upside. That's very, very bullish. But a lot of people were buying calls, okay? And we saw here that the call buying was extreme on the put call ratio, okay? But here, the key, we talked about it before, VIX, okay? What do I see in VIX, okay? This bothers me. I'm bullish. I'm net bullish, although I have some shorts, and today I added some more shorts here. We'll get to that shortly. But what I wanted to say is that the VIX is at 17, which is fairly high. However, it was up today or flat as the market is going up. Okay, usually when the market's up, VIX should be down. We mentioned that the VIX with this market should be trading much, much lower. However, this divergence, let's say, it's like when you see the VIX going up and the market going up at the same time, we're probably going to get a move higher on the VIX, which means a move down on the SPY. These moves are getting very, very extreme. There has to be some kind of pullback. It's quote unquote unnatural for this to happen, absent some kind of like stimulus. Maybe everybody's dumping their cash in at the end. People are getting bullish here. They're buying massive amounts of calls here when you should be bullish here. We were bullish here. Okay, so that's the worry that I have, is that it broke to the upside, but it might be a false breakout. Okay, we could, again, not too extreme on the some of the oscillators that we look at. It could have that 1 or 2 days more, like maybe into Friday we still bid, we still don't crash, but I think soon we're going to go down. So let's get to the trades that I did today. Okay, first, because I think we go down, I look at the SMH, the leaders, the semiconductors. These guys will go down to. This is a carbon copy, a mirror, not a mirror image, a parallel image of SPY, except it's the leader. Okay, this is parabolic moves higher, very, very high, very, very high on all the RSIs and the MACD. Okay, it doesn't mean it can't go higher. I'm just saying that it's very, very high. I expect a pullback coming soon. So I entered a trade. This is one trade that I did today. It's a short trade, but I structured it in such a way that I got a credit. Okay, because this is what I did. Okay, to be more specific, I bought some puts and sold some puts. I just did a massive amount of put buying. Okay, so what did I do? Okay, here, 175, I bought a put on the SMH at 175. Okay, and I sold one here. I think it was 45, yeah, or 35. Okay, so I locked in a what is it, 45, 30, a $30 profit if it ever goes down here. But this is at a debit, but I also sold 2 puts here to finance this spread and give me a credit. Okay, now why did I do that? Okay, the reason is if we get a pullback back to the this is a sort of a level here, but it's very, very weak. We could go down and bounce on this level, although I don't really think so. There really is no level. This is like really a straight move up. But I'm thinking that if we ever do go down and have a big move down, because a lot of people are buying calls, we're probably going to visit the most logical level would be this technical level here, the 427 on the SMH. Okay, so this put spread, right now we did this for a credit. So here we're making some money, but as it gets to this level here, we're going to make the most money. Okay, so if it ever hits down at this level, I did it in June. Okay, if it ever goes down to this level, to the 427, we will be making the maximum amount of money. Okay, and if it goes lower, we're still making a lot of money. However, at this point here, the 400 level is when we're going to get long. Okay, so we're exposed to being long here by 2 puts. 2-1-1. It's 1-1-2 ratio. Okay, so I don't mind being long here because we're literally, it's going to be a huge move down if it ever happens. I don't think it does. And if it ever goes here, it covers the gap. It's a very logical place to go long for a bounce back. And if I do get assigned these puts, being long the SMH, I'd love to be long at 400. Okay, so we have this spread here I think it's the perfect move for what I expect going forward. A medium-term drop would put us a lot in the money here, and we're doing it out of credit. So if the market still stupidly, like, I don't know how, but if it continues to go higher, we will not lose. We'll make a small credit on this trade. Okay, so that's what I did on SMH. And the other trade that we talked about yesterday that I entered in was Now. Okay, ServiceNow. We see this downward move. I think that the AI craze it's crazy. It's going. I just don't think that the SaaS stocks are gonna die anymore. Okay, I just might be some kind of rotation because we mentioned yesterday there was a positive divergence. So I entered a trade here, also for July out of credit. I sold the 85 as we mentioned. I sold the 85 put, and I bought the 80 put. Okay, and I did this because I did this for a credit of about $1.70. Okay, so we said that we want to do it for at least a third the width of this spread. This is a bullish spread. The spread is $5, so you should do it for $1.66, 67 minimum for it to be a good risk reward, and for you to have a positive expectation to make profit. So anything less, no way I wouldn't do it. So I took it for $1.70, which makes sense because it's 1/3 the width. So I expect to make money on this, on some kind of rebound, because I think the selling on this stock and on the SaaS stocks is due for a bounce. I'm not bullish. I just think it's due for a bounce, and we're going to collect the premium. That's what I think is going to happen going forward. Okay, so that's it, guys. Okay, crazy market. Rocket ship market up to new highs. Launch pad today. When the war is over, we might get a few fumes like rising Thursday and Friday of this week. We get on the 7th and the 8th of May, we could get some kind of rising on fumes, especially if a deal gets done. You never know. And then I think we go down. I don't know how far down we go, but we definitely have to get rid of some of these call buyers that were buying for the past week and couple weeks. Okay, they might be right for 1 or 2 days, but after that I just don't see it, because if everybody's piling on long, I mean, that's just nuts. You can't have, usually the massively consensus trade is not profitable. I mean, it's not about going against the trend. It's about seeing something that is massively positioned to one side and doing the opposite. Although that's why I don't think, as with SMH, I don't think any drop will be a reason to go bearish. It's going to be a buyable drop. I'm just waiting. Okay, waiting for it to sort of like go longer. Okay, so my cash is waiting. All right, guys. Looking forward to the rest of this week. We could be drifting higher. You never know. All right, later.